Aman Chowhan joins us now. Let's take a conversation forward and understand that what kind of positioning he feels one should have in this kind of a market. Aman, good morning. Thank you for joining us. Aman, last time when we spoke, Nifty was at 17,500. A lot has changed. Adani Fiasco, budget, FI selling, and Nifty is still at 17,500. The bulls would say that despite bad news, it is not going higher. The bears would argue that Nifty is not going higher because earnings are down and inflation is back. Which side of the equation are you on?
I'm on the positive side that because in spite of FI selling, the domestic liquidity has been strong enough to absorb that and held on to the markets. What has happened in the near term? See, markets are a slave of earnings. We all know that, and the current last quarter, even the current quarter, we have not seen earnings upgrades coming in.
Aman, but we've seen two quarters of earnings downgrade rather than upgrade. There are there are cracks now which are there in FY24 assumptions. Slowdown, I think, is evident in export and rural facing businesses. So, if we are in for a bit of a slowdown and earnings downgrade cycle, why should one be optimistic? Why do you think it is not time to raise cash, sit on sidelines, wait for the market decline, and then participate?
So we do have cash in our portfolios. In fact, the new fund that we just launched, and we are raising money as we speak, we are just 20% deployed there, and I believe we'll take at least 2 to 3 months to deploy that money. So it's not that we are fully invested. At the same time, it's not that when the market is down, all sectors will be down and vice versa, right? So there will always be some sectors that outperform. Like last year, IT and pharma were down. Cap goods, engineering companies did well. Going ahead, there can be another level of sector rotation. Maybe financials can continue to do well. So you need to position yourself. It's not that you can't take a very severe cash call that market is down and you have to sell it.
To have snapped that line, we'll just get back to Aman Chauhan and get his take on the market and, of course, what his portfolio recommendations are.
All right. We've got a better line now with Aman, so let's connect with him again. Aman, from a market standpoint, how should
Yeah.
one read into the Adani fiasco? Do you think the impact in terms of collateral damage on lenders, the domino effect in terms of market positioning, the technical sell off, what we've seen, is this behind us now?
I think it's more of a sentimental impact than a liquidity or a lender's impact. At least for now, we don't see that this fiasco spreading out to other markets. Sentimentally, also, I believe bulk of the retail HNI category would be impacted here. So while there are two sides of the coin, somebody would have gained out of this fiasco also. But more or less, we can assume that people would have lost money, and I think it's a matter of few months before this gets forgotten and life moves on.
We spoke about two themes. One was private banks, something which you bought, I think, 6, 7 months ago. And then there were a lot of railway stocks which are part of your portfolio, whatever we have in the public domain. Have you identified any more small niche themes for 2023?
So within financials, microfinance is something that we like. This sector is coming out of the COVID worries and this very strong growth numbers that we have seen from all the players in this micro segment. That is something that we like. We are incrementally getting positive on auto ancillaries also. So while we don't own a direct auto stock, but we are getting into new names into auto ancillary. Railways manufacturing, clearly there is a good headway for the next 2 to 3 years. The only issue is to get liquidity and to get stock at reasonable prices. So that still is not something that has been, it's been in our radar, but we have not been able to execute much on that front. Pharma on the fringe is looking good. The kind of companies which got impacted due to higher API prices will now, I think, start to regain the kind of API company numbers which you are seeing where profits have declined by 30-40%. Clearly, is going to benefit the pharma companies which use this API. So, the next maybe 3-6 months, pharma can also be an interesting sector to look at.
But hasn't Pharma seen what could be called as a structural damage? Especially the US companies, whatever assumptions were, demand will remain high, generic companies will take over, pricing will stabilize. All that big picture assumption which we had 3 years ago that pharma will be the next IT, that has got challenged. I mean, there's a structural problem there. Let's admit it.
Yes, there is. And We felt that as generic companies, we are anyway selling products which is 1/3 or 1/4 or maybe 1/10 of the non-generic products there, and hence we might not face margin pressures. But that has not been the case, and hence one has to be very selective. So out of the 10, say top 10 pharma companies exporting to US or the European markets, maybe only two or three who have a strong portfolio and maybe a strong brand positioning will be able to survive in this
Right. Okay, Aman, we seem to be getting you on a very, very bad line today. So we'll leave it at that. Glad to have you on the show as always.